So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This 50 pips, rocking and rolling, 29th of May, 2020. No trade calls, no recommendations. Everybody sponsor their own stuff. We're here for educational purposes only. So, what's going on? Just wanted to do a quick update here before London opens. And just to make sure everybody has something to keep in mind for today. There are a lot of things going on. We'll have to discuss all these things in a lot more detail in the Sunday update, but I just want to give you a heads up on a couple of things. So here, keep in mind that a lot of people will be looking for the market to have put in a top and roll, but we still have to be a little bit careful. As always, we want to focus on the levels, how price reacts on the levels. Today should be an interesting day. I mean, apart from data and apart from Powell speaking, really the focus is on Trump, right? We discussed yesterday, as we've been saying, it's all about short-term event risk around these key levels, especially with Trump talking about, the social media bill or now, especially what's going to come out with China. So the big question here is, and you never know, but really, who wants to hold long exposure into the weekend if Trump is going to do something on China with the risk of retaliation, et cetera, coming over the weekend. Also, as we go into the end of the month, last trading day of the month, we could see some more rebalancing flows, some selling coming through on equities. So everything is pointing to a short-term top in markets and a pullback. As always, you can never bank on these things, but again, focus on the level, see how price reacts at all the different levels. Now, a lot of people writing in asking about the currency markets. I mean, what we said is you have to be careful because USD CNH, we would say you have to keep an eye on this because it's clearly important, and this could, if this breaks higher, it could cause a lot of a snowball effect. But you have to be careful, right? Because the more you see everybody getting excited here, right? Oh, it's going to break 720, it's going to go through the roof. Usually the market's got to shake out the weak hands, right? So here, what it just looks like is that all the weak hands or all the YOLOs trying to buy ahead of a brick wall, right, are just getting shaken out. Now, does that mean that if things heat up, this won't ultimately break higher? Absolutely not. But again, price rarely moves in a straight line, and you never want to buy in front of a brick wall, right? You prefer to wait for that brick wall to get broken, or you want to buy before we start the move into the brick wall with better risk reward. So again, I don't see anything to report here. It's still something I'm keeping on the radar, but nothing really exceptional. I put this down to the same thing. As soon as you get everybody on social media, on TV, etc., getting excited, this is going to break 720. That's the time you'll see a pullback. In the same way, every time Euro has a couple of down days and everybody gets on social media, on TV, saying that's it, Euro's going to 70 cents, 80 cents, that's usually the time to buy. Nothing has really changed there. So here, there are a couple of key levels, right? And again, you see how NASDAQ is still hovering around this gap fill zone, which we discussed as being a pivotal level, right? And where we initiated shorts the other day. And these trades are still in play, but you see how it's just a lot of chop, right? You still see that action in the overnight sessions. You get the pump, then it's not doing much during the regular trading hour. You're getting some selling into the end of the day, but broadly speaking, you can slap all the indicators you want on the chart. You can read all the articles you want. Nothing has changed. We're just chopping around, right? Chopping around, waiting for the next catalyst, waiting for the next shoe to drop. Now, obviously, the weekly close is going to be interesting because should this close negative on the week, right, then again, it's another sign that we probably put in some kind of short-term top here. So again, be focus on NASDAQ. Let's see how we trade today. And remember, there'll be a lot of risk over the weekend. One thing which I wanted to go through before I go through the Russell is, again, you see when things heat up, we said the other day, don't focus. You'll see yen move when it needs to move, right? And you see we're just stuck, chop, nothing going around, but you see the selling is still there, right? Look at all these wicks. It's unable to attract new buyers at highs, right? Don't make it harder than it should be, right? It's not a particularly interesting zone, and what it's telling you is that clearly there's no new buyers at highs. There's nothing really to to push this out, but to push this higher, but clearly it's stalling right now on yen. As long as we're stuck inside this range, it's really much to do about nothing. But especially if we continue to see pressure on today, right? What you would clearly expect is to see this come back to the opposite side of this tight range. But I still think, there are far more interesting opportunities out there than the yen right now. But clearly, if things get a little bit funky, you'll see that yen moving down, and the same way that you see the Swissy moving down. Now, a lot of people always struggle between, USD JPY and USD CHF, looking for which one to play in terms of risk off, looking for which one to play in terms of safe haven bid. And the reality is usually yen is a clearer play. But because USD CHF, the SMB is always active. There's a lot of wheeling and dealing, a lot of shenanigans. It's not such a pure play. Sometimes it will lead, sometimes it won't. On balance, if I only had to pick one, I would always pick the yen, but they're both serve their purpose. And what you want to look at, if you look at it statistically, if you look at it in terms of over time, it's the basket of yen and CHF, right? When risk off comes into play, when people are looking for safe haven, on balance, right, being long yen, long CHF, right? That's the play, right? And they don't always have to behave the same way. They don't both have to lead, but on balance, both of them together, that's where the flows will go, okay? Now, no change to our euro trade. We're still long, right? There's really not that much change in all the things we've been discussing. And again, we'll update over the weekend and Sunday. But what I wanted to discuss was the Russell, right? So the same way we talk about, the Russell tends to lead, right? Both to the downside and to the upside in terms of the big roll, and then when we start to see some rotation back up, et cetera, et cetera. So it continues to serve that purpose as far as we're concerned. Now here is the first one to rotate out. It rotated out very aggressively as we're talking about reopening the economy. Everything's fixed. We're going back to normal. And we'd said, there's no point trying to fade the Russell, right, in this ramp up. We looked at we stayed on that NASDAQ around that gap fill zone, right? But we were absolutely not interested in fading Russell at all. If anything, you have to be long Russell against short NASDAQ. Now, yesterday we said it's time to look at the Russell again, right? It's time to look at the Russell again. Why? Because we're coming into an extremely interesting area when we've got multi-confluence of levels, right? So I know some people also like to have the fib up here, right? I'm not a huge fan of the fib in this zone, but it's another level, right? So what's happening here? So basically, the Russell is coming right back up after we bottom. We rallied back up aggressively, right? We got sold at previous support, which acted as resistance. You see the market tried to sell off here. Now what happened? No bears could not get any traction, and we continued to make higher highs, right? And on this sell-off here, we made a higher low, and then we continued to make higher highs, higher lows. This rotation all the way back higher, right? Into what? Well, first of all, into an extremely pivotal zone, which is the 1450, right? You can look back on your chart and you see that this level has been a key support for ages, right? So key support expected to be resistance on the move back. Up, number one. Number two, the confluence of the key support, 1450, and the gap fill zone. Okay, so we've already got, the gap fill zone, we already have two zones. So one is that previous support, which is now resistance. Number two, we have the gap fill. Okay, number three, also you can see on the fib, it's the 61.8 now, right? Now it's traded back below, but again, I wouldn't really look at the fib. And the fourth point, which really for me is the third point, is the protection of the 200 DMA. Okay, right here. So this is extremely interesting zone, and that's why we said coming into yesterday, we're looking to short any kind of failure into the 1450 and look for a daily negative close as confirmation, right? So you see we'd come into that the market had stalled here, right? When we're closing so strong, right, into those highs, and we know that the market has the magical ramp up in the overnight session, the last thing is you want to sell into a close into the high just ahead of the overnight session, because you know you're going to get clipped, right? So what happens the other day, we press into those highs, right? So, and then in the overnight session, bam, we pop higher and we're hovering here. So we said coming into the any failure here, right? And that could be a 15-minute, 1 minute, 1 hour, 4 hour, etc. Any failure, right? Ideally into the after the cash open into the 10, 11 a.m. window is going to be an interesting opportunity to get short, right? Move back below that gap fill zone, move back down below that gap fill zone, the protection of the 1450, the protection of the gap fill, at the gap fills back below the gap fill zone, and the protection of the 200 DMA. Why is that interesting? This is interesting because it gives you, on a move back down, extremely tight risk for a very, very interesting reward. Not only if you're playing for, you see this failed break here to move back to the opposite side, right? But especially, as we said, if you're looking for this triple confluence zone to be confirmed by a daily close, right? Because what happens on the daily close, then people are going to be coming in, looking at the daily close. It should attract more sellers, but ideally, because of the way you manage the trade, you're already locked some in and you're holding this. So either you're holding it, you might have covered 50% of your position and now you can keep your stop wide and just see if you get a roll, or after you covered some, you're just waiting for some kind of overnight ramp into the cash open, right? And to get back short and lay back out a full position, get back to 100% short, and ideally see that pressure coming in as we see, selling into that press conference, ideally selling into month-end flows, selling as people want to take risk off ahead of the weekend, and then hopefully we get a little bit of traction. So again, this is a good example of looking at multi-confluence levels and tactically trying to get into that trade by front running, what you expect to happen or something that could happen, because we never know how these things could play out. So again, this is a very interesting zone. Keep an eye on how we trade today. Ideally, these highs don't get taken out at all, right? But you never know. It's tricky. Ideally, what you want to see here is you want to see, of course, people say, well, you want to see this drop like a stone, but market doesn't usually move in a straight line. Ideally, what you want to see here is to get a little bit of a ramp, as much as can, but that can't take out those highs, some selling coming in after the cash open, and then, markets stay heavy and then roll and close on the lows. Okay. So that's pretty much what we'll be looking at. There are a lot of things playing out. We'll look in the Sunday video, depending on how this closes. We'll discuss trade management a little bit more, targets, etc., and update what we were saying, all those trades we had on NASDAQ, Euro, and etc., etc. Okay. Hope everybody has an awesome day. Let's see what we get. Have a great weekend ahead. All the best. Take care. Bye-bye, guys.